Which one should you take, a bank loan or a Sacco loan? So let's do a comparison between the two. In terms of interest rate, the interest rate from a Sacco is lower, slightly lower than that of a bank. For example, let's assume you're going to take a loan of 100K. You might get an interest of 8% with a Sacco, but for the same loan amount, if you're to take it from a bank, it can be 10 to 12%. Number two, in terms of the interest rate for most banks is calculated on the straight line method. And for the SACCOs, it's mostly calculated on the reducing balance. And with the straight line method, you are paying a flat rate. Let's say you're going to be paying a 1% interest. So you're going to be paying 1K, 1K, 1K all throughout the entire period until you finish paying the loan. But for the reducing balance, which is most popular amongst SACCOs, for example, let's say you're paying 1% interest rate. The first month you'll pay 1,000 bob, the next month you'll pay 990, the following one you'll pay 950. So it keeps on reducing. The third difference is on the loan security. Let's say you want to take a loan from a SACCO. You need to have guarantors, you need to have shares. Like for most SACCOs, that's the case, and also some savings. But for banks, because you're not a shareholder, they check your pay slip, they check your cash, your regular cash deposits, just looking at the regular cash flow, your salary. Please note, this is not for all SACCOs and banks. This is for most SACCOs and banks here in Kenya. The other difference is in the amount that you are able to get as a loan. Like, for example, for a bank, you are able to get a huge sum of a loan, unlike a SACCO. You can access a loan of, let's say, 2M from a bank. For SACCOs, getting that 1 million might be highly unlikely because you don't have savings and shareholding. In terms of accessibility, SACCOs are better. You have to remember that SACCOs are mainly based on savings and credit. That's why they're called SACCOs, savings and credit cooperatives. So that, with that in mind, that's why it's easier to access a loan. It's just that the amount might not be as high like that from a bank. For a SACCO, the repayment period is quite shorter or just a little bit lesser than that of a bank. You are able to repay a loan like in 2 years, 3 years, but for a bank, it can go up to 10 years, 8 years. So the repayment period for a loan for a bank is slightly higher than the repayment period for a loan in a SACCO. Getting a loan from a bank can be quite difficult because of the requirements that are needed. But you have to remember you're not a member of the bank like a SACCO. You don't hold a shareholding. So that's why they have those so many requirements that you have to meet in order to get a loan. Now, having given the comparison, there are several things that you have to keep in mind. You really can't say a SACCO is like a bank. A SACCO is based on membership. Members make the contribution. In a nutshell, choose a loan that you feel most comfortable taking in. If it's a SACCO loan, if it's a bank loan, whichever is your preference, let me know and share your thoughts on that.